Welcome back, YouTube, to another video where I'm going to teach you how to make money trading options. So far this month, I'm up about $64,000, which is only 2.66% of my portfolio. Not the best month so far, but I'm not complaining. In this video, what I want to focus on is going to be several different strategies to grow your money very quickly and multiply it. Actually, this is a very special video because in today's video, I want to talk about a very simple strategy that's cheap, you can utilize to make big returns and make a lot of cash quickly. I'm going to continue a series on option trading to multiply your account faster and safer than anything else because that's my area of expertise after working for Goldman Sachs. You can check out my Discord, over $2.5 million in profit per month from the members in total. All of my alerts are live and I show wins and losses, so no BS. Now, I really need you to pay attention as I go through each example because you can steal the same process for yourself. The benefit with each strategy will be to make the most amount of money while having maximum control. We will exploit high and low volatility as well as option spread. The third strategy will give you the power to scalp the market for profit. The first strategy will take advantage of a stock trading sideways. So let me show you a sideways stock right now. We're going to be using Palantir as an example. Palantir Technologies is a really good long-term bullish stock, but if I go to the 3-month chart, this stock has honestly not gone anywhere. Now, I do have 5,000 shares, which is 5% of my portfolio. I'm up $10,000 on the stock itself, as well as I'm playing several different options here. But the most important thing that you need to realize is that Palantir is going up, it's going down, but in the short term, it's not really doing a whole lot. So the first strategy that I want to show you is going to capitalize on a stock moving sideways. It's also able to capitalize if a stock is range bound. So here is the first strategy on Palantir. I'm going to be picking an option that's going to expire not that far into the future. I picked July 5th, but if you're watching this video in the future, it really doesn't matter as you can copy and paste the same logic and run the same strategy to make money over and over again. So I'm going to get rid of the selections that I have right now. I'm just going to show you how this position would look like if I were to open this position from absolute scratch. So the first thing that I'm going to do is I'm going to start by selling a call option. So this call option is going to be very important because this call option right here is telling me where I think the peak is going to be. Now, I said that I'm slightly bullish on Palantir in the short term. In the long term, I am bullish. But because this option is going to expire in just 22 days as I'm making this video, this would be a short-term play. So I'm going to sell a call option at 24. That's because I think Palantir can go up just a little bit, but in the short term, probably not that much. And because it's probably not going to go up that much, and as we just saw on the chart, the stock is absolutely just moving sideways. In the past 3 months, it hasn't made much money. I'm going to be selling the 24 call option. So this call option right here, if you will notice, has pretty good volume. Volume is very important in general when you are trading options, because if there is no volume, you won't be able to get filled on a position. And if you do get filled, pay attention right here to this bid and ask. This is called a bid and ask spread. The difference here is 5 cents. That's pretty good because you want to look for an option that has a very tight spread. Otherwise, you are going to be losing money. In fact, as you can see here, the mark is 0.825, which is actually the middle point here of the bid and ask. So if you want to get executed on a trade, you're probably not going to, be able to buy it for the bid price here, which is 0.8. You're also not going to be able to sell it for 0.85. But anyways, let's go on with the strategy. I just wanted you to understand on a deep level how this actually works. So I'm going to sell the 24, and now what I'm going to do is I'm going to buy a different option right now. So I'm actually going to go down by 1. Okay, so I ended up selling the 24. Now I'm going to buy the 23. All right, but I'm also going to go up higher than the 24 and I'm going to buy the 25. So the only thing that needs to be changed now is that I'm going to create a custom order. And if you're using a different brokerage, doesn't really matter. What you want to pay attention to is you want to have an equal amount of sells for each buy. So by having an equal amount of sells for each buy, this is going to be a balanced strategy where, as you can see here, I can basically risk $10 and make $90. So, and this is just an example. You may want to do this on a different stock, but in this example, I can literally 10x my money. I can literally turn $10 into $90 or $100. I'm spending 10, but my 10 can turn into $100. So this is a really good strategy. And this is a strategy that I do run from time to time. And I will be honest with you that there are risks to this strategy. However, the returns are just absolutely ridiculous. And you do have a lot of control with this strategy. Specifically, as I mentioned, if a stock is moving sideways, this is exactly when you want to execute and run this strategy. Now, in terms of actually managing this strategy and closing it for a profit, you want to pay attention to the momentum. All right, so that's the first thing. And another trick is you want to determine if a stock is moving sideways. You can look for several key factors in its price action and also use various technical analysis tools like flat or horizontal trend line. Listen, you need to identify clear levels of support. When you're running this strategy, you want to look for support where the price tends to stop falling and resistance where the price tends to stop rising. In a sideways market, the price will frequently bounce between these two levels. So once you have the pattern down, you can select the strike prices for this strategy. Here you can see that the break even is going to be 23.10 on the downside. And on the upper side, it's going to be 24.90. So if I show you Palantir on a chart right now, you're going to notice several things. So I'm going to go to the charting feature here of Yahoo Finance. You're welcome to chart any way that you wish, as long as you're using something called the Bollinger Band. I typically use a period of 20 days, and that is going to cover an entire month. All right. The standard deviation that I use is going to be 2. So you can see right here how Palantir is actually having a current wide Bollinger Band. But if I go to the 1 month chart right here, you will see that the top of the Bollinger Band is 24.06. So if I go back, the option position that we have right here, that Bollinger Band is capturing, okay, the top end here. So we don't think that the stock is going to move too much higher. And that's because you can already see that Palantir has already moved higher. In the past 1 month, the stock was roughly $20.94, and now it's all the way up towards $24. So we don't think it's going to rise that much more because it's already seen a decent rise. You can also notice here the RSI is 62. So you can already know that Palantir is towards the top of its range, but I'm actually bullish on it. I am not worried about the bottom of its range. I think Palantir will rise a little bit. And given that expectation, I'm planning to make a lot of money by Palantir just slightly going up. Now listen, you do not need to hold this position until expiration. So many people think they have to hold options until expiration. The thing is, you should be holding simple options to expiration if you're an options seller, which is what I mainly talk about on this channel in my other videos. But for this strategy specifically, you do not want to hold it until expiration because it's very hard to actually wait until the last day, since the stock will bounce around. You're almost never going to see the full expected profit. However, if you're in this range right here, what you can do is you can take profit anytime. Specifically, if it's been like a week and the stock has gone up just a little bit, this position can, go from, let's say, the $10 that you spend up to $30. And if you can see a 3x return like that from 10 to 30, then it does make sense to close out this position in a week, because essentially you've 3x'd your money in 1 week. Even if you see a 2-week period and you have a 3x return, that's still phenomenal. Basically, you want to set your exit point to where you are happy with the stock. If the stock is just staying where it's at, that's actually going to be a good thing, because this strategy right here does profit from time going on while the stock moves sideways. Is going to increase in value every single day. Now look, you can also play around with this just a little bit. So for example, if I take 25 away and I go 25.5, you can now see how you can actually have a very different return here. However, you can protect your downside. So as you can see, a small little change here now gives gives me the opportunity to basically protect my downside. Let's say you're a little bit bearish, and if the stock goes up, you will start to lose money. However, you're not really going to lose money unless it goes beyond 25. This strategy also has a little bit of an advantage because now you can make a bit more money. At the very peak, you can make $105. So if you're very sure that it's going to end at 24, this strategy will be slightly more profitable. Now, I also want to show you a different strategy here. It's going to be very similar. This bearish strategy right here is also a very interesting one. And you might not want to use it on Palantir, but you might want to use it on a stock that you are bearish on. So this strategy right here is much better than just buying a put option, because as you can see, if you are just slightly bearish, you can get a huge return here at $79 by just risking $21. So this is basically a 4x return also in 3 weeks. So 3 to 4x returns on both of these strategies. Now, let me show you how to open up this strategy. I'm going to get rid of the 24 here and the 22.5, and I'm going to go back to selling the 23. So check this out. I'm going to sell the 23 put option. Now, with this strategy, it's very similar to the other strategy, except we're using puts right now, okay? You don't want to just sell a put option. That's going to be very expensive. You can see here that the maximum loss is very, very large. Of course, this would assume that the stock would fall down to 0, but still, the maximum collateral you need here is very big. And I'm going to buy just a little bit lower. Okay, I'm going to go down by 0.5, but on the upside for buying a put, I'm going to go a little bit higher. Instead of 0.5, I'm going to go up by 2. So now you'll notice that this is a very, bearish position. However, I don't want to necessarily risk $77. That's kind of, it's not high, but again, I'm showing you cheap option strategies to make a lot of money. So given the cheap option strategies, I'm going to go here and create another custom ratio. And just like the last strategy, I want an even amount of sells for each buy. Okay. Now I'm getting a much lower price. Of course, I can't make $2,000, but in the previous example that you just saw, you're not going to do that anyways unless the stock goes down to 0. Instead, let's be more realistic. Being more realistic means that the stock just might fall like 2%, 3%. So if the stock fell down by 3%, it would basically be a $23 stock. And lo and behold, right here, your maximum price or the maximum benefit that you get, the expected profit here, will be $79 by just risking $21. And this assumes basically if the stock fell down by 3.36%, you can see it on the screen right there. If it fell down by just 3%, which is very realistic, right? On a stock that's, let's say you're kind of slightly bearish on a high quality stock, right? Stocks don't typically just crash 15 or 20% for no reason, right? But a stock can easily just fall down 3% if you're slightly bearish on it in a 3-week period. So here you can literally 4x your money. And again, you do not necessarily want to hold this position until expiration, because if you hold the position until expiration, you end up waiting a lot longer when you can actually just do the strategy multiple times within the same period. But at the same time, I don't like doing very short-term trading, because if I go for 1 day or 8 days, that really gives me no time for the stock to have any significant move. So what I like to do with this strategy is I like to open the strategy for 3 weeks or 4 weeks out, potentially even 5 or 6 weeks, but I close out the position once it's 3 weeks in. This position can be hard to manage because, well, for example, here we do have 4 option legs. And because we have 4 option legs, it can be a bit more difficult to close out the position since you are dealing with multiple options, which each have a bid and ask spread. So that's also why I said in the beginning of this video, it's so important for you to look at an option that has good volume, okay? Here, this is pretty good volume because it's 759, but the bid ask spread here is not as good as it can be. So you might want to look for a tighter bid ask spread, which, let's go into our next example where we might even talk about, scalping right now, is going to be NVIDIA. Now, for NVIDIA, I've become a bull on NVIDIA. This stock is rising. Nothing can really stop it. I am pretty bullish on NVIDIA, and I've started making pretty good money on NVIDIA stock. However, let's just pretend for an example that NVIDIA has already gone up so much. In fact, in the past year, it's gone up 218%. So let's just say that you think that the stock can stall, like it's not going to go up too much in the short term. So look, here's actually a shorter term, super cheap strategy that you can run, okay? I'm gonna look at the June 14 right now. This is gonna be a 0 days to expiration trade or a 0 DTE trade. And this one specifically, I'm going to show you what an iron condor can do for you, especially given a sideways market. An iron condor can actually give you really steady income on a weekly basis or even on a daily basis. And this strategy will also benefit if a stock basically moves sideways. So here's what you can do. okay, you're gonna start off by going down a bit. So let's say in the next one day, we don't think that NVIDIA will go below 123, okay? Let's just say for whatever reason we determined that 123 is gonna be a daily support, okay? So I'm gonna go for 123 and sell a put option at 123. But now what I wanna do is I'm gonna also buy a put option. Okay, so the first one you sell, and the second one I'm going to buy, and I'm going to create a $1 difference. All right, so the $1 difference here, I'm going to go from 78 and collecting, and then I'm going to create a $1 difference, and I'm going to pay 65 cents. All right, so this right here, it's currently showing you like a win of 25 and 75. Not sure if it's 100% accurate, given there's going to be a little bit of difference because of the bid-ask spread, okay? But, you know, for this example, we're just not going to consider the bid-ask spread too heavily anymore. Now, what I want to do is I've sold a put credit spread. Now, this is a put credit spread, all right? This is a betting that the stock will stay above. But now, I also want to sell some call options and collect money on both sides, okay? Now, to open up an iron condor, now you need to sell the call side of things, okay? We just did the puts. Okay, you can see right here that I sold a 123 put and then I bought a 122 put. Now what I want to do is I want to sell a call option. So I'm going to sell something. Let's say, for example, we don't think it's going to go up too much more because it's already kind of skyrocketed in price. And let's say, you know, for the day, we think it's going to be fairly flat. So what you can do is you can sell a 129 right now, okay? And then you would just go up by $1 from 129 to 130 on the strike price, all right? The difference here is not that much. However, you can see now that this position here would give you a pretty good return, like a more than 50% return in a single day. So this option would expire in the same day, 0 DT basically, or the next day, so 24-hour period. And as long as the stock stays within this range, you're going to realize a profit. Now, this stock or this option strategy can be kind of difficult for managing, okay? So if it goes beyond your range here, so if NVIDIA goes up past like 130, you basically want to close out this trade, okay? Because you don't want to realize the full loss on this trade. And losses are very serious, okay? Because when you lose money, it can be very difficult to make it back. So I always like to have correct position sizing. I never put too much money into one single trade. And I like to have a diversity of high quality stocks. And I'm always running safe option strategies. Now, this strategy right here is as safe as it gets for the level of risk that you're taking, because the return here is absolutely astronomically high, right? So given the high return, this is going to be a bit higher or a lot higher on the risk. And the way you want to manage this position is you want NVIDIA to stay within this green zone. If NVIDIA just stays within the zone, this is where you're going to experience the biggest amounts of returns. And as time hits, which is basically every hour, since this option is expiring so short term, you're going to be making money on an hourly basis, okay? Every single hour, you may make $1, I don't know, 75 cents. Not something high because obviously, you know, our maximum profit here is $39, but technically, if this option stays within this range and it expires, then you've made $39 in 24-hour period. So you've made over $1 an hour, depending if you want to count the hours the market is closed. Or if you count, let's say, 8 hours of the market being open, then you're basically making $5 per hour on this option position, which is pretty good considering you can open up multiple contracts here. So if I click continue, and let's say, for example, I wanted to open up a position of 25, basically this would be $975 in a single day. Now, yes, the risk is higher, but the reward is also very, very juicy because you're only risking $1,500. And if you have a bigger portfolio, then this is a very easy amount to risk. If you have a small portfolio, then you're probably not going to want to risk too much on any one single position. You're going to want to diversify and have multiple positions open. So you can use these strategies. You can also check out OptionsFi. OptionsFi is a website that I personally like to use. I have contributed to it and I have worked for this company. I really like what they're doing with their AI engine, and they give you different specific plays. So these signals have been very profitable for me. I've actually gotten several NVIDIA plays as well as Airbnb plays by seeing the different strategies that they have. They have different spreads. They have covered calls. They have debit call spreads. They have debit put spreads. They all have many different strategies, and I've been very profitable, especially with their earnings plays. So go ahead, I'll leave the link in the description here for this signal service, and I will catch you guys in the next video.